Good morning. I hope you are doing great. It's Thursday. Yeah, so today let's just have a 10 minutes talk about the US economy, or let's say the economy in general, or stock markets. As we actually trade most of them, I trade Nasdaq, I trade US 30, S&P 500, and other things like US oil, gold, and stuff like that. So instead of talking about daily analysis or the charts, I think we also have to have this conversation where we just talk about what will or what might happen going further. We know very well that the markets actually are still going higher after the elections, you see. So the question will be sorry, I have a throat problem, I think, after the flu. So what's really happening is after elections, we know that Trump won, obviously, but he's not really yet officially the president. Obviously, maybe I think it's going to be around January. So mostly he seems, or the market seems to be liking the decision that people who voted actually did. Obviously, he won. So which means we see the market pushing very nice, which means they like Trump. Investors seems to be liking Trump. But how true is this? I don't think maybe we look this in a good way, because mostly we just think maybe, oh, Trump he won, the market will be going up and stuff like that. Because if we check different factors or facts about the economy or about the stocks, they don't really care much about the president, even though the president might have this effect, because they will just come there and say, you know what, we will have corporate tax cuts. So those tax cuts, they will come, but remember, Trump won't just approve everything by himself. There are governors who are going to actually have to approve that. There is a house of a representative that is going to actually do that, you see. So which means him alone actually is not enough. He can't just say we're going to increase 60% of tariffs. So if the Congress allows that, if they approve that, it means yes, it's going to be like that, you see. So which means whatever that they are talking about, let's say we're going to pump more oil, we're going to do this, yes, some of the goals or the targets or the rules that he's going to put in place, yes, they are going to be implemented, but not everything, you see. So when we look on the market, like us as investors, how can we actually be on the right side of the market? You see, how can we be on the right side of the market after Trump won? Or we can say the Trump economy 2025. What will happen? Will the market start to fly? Will the market start to go up like never before? Mostly it's no. The market is actually been selling before that. And mostly around this time, November, December, October, November, December, every year, mostly the stock markets go higher. And the reason behind this is we have companies which release or report their earnings around this time. I think it's Q3 or Q4 or something like that. So those earnings actually most likely, because it's towards festive season, people are spending more, you see. So which means most likely we are going to get positive stocks, regardless of the elections, regardless of the president, you see. But yes, there are some other effects that can actually have a positive move on the market. I will try to talk about other things that will affect the stock markets, right? So, but most important thing that can move the market positively, or maybe the dollar, as we're talking about US, it's going to be geopolitics. If geopolitics, like let's say Russia, Ukraine, as Trump actually mentioned several times, that is going to make sure that he stop those wars. There are so many wars at the moment. I think Middle East, Russia, not really yet at the moment. There's just cold wars between, let's say, China and Taiwan. So we can see things brewing. But if maybe Trump can actually de-escalate these tensions, that is actually good for the stocks, because those countries, let's say maybe 6 countries involved in those wars, right? So those investors from those countries, obviously, instead of focusing on the war or tensions, they will have enough time to do what? To look for different stocks, to buy different stocks, you see. But when there is tensions, most likely they are going to look on alternatives like gold. At the moment, we'll just talk about gold. You see. So which means if these geopolitics are going to stop, mostly we're going to have like much better consumer confidence, which means people are starting to go, people or consumers are going to spend without worries, you see. So that, I can say, can have a positive impact, or it has a direct impact with the market, because if Trump is going to actually focus on consumers, and maybe let's say there's not going to be any war, that might be a very good thing for the stocks, because now there will be enough people in the market to do what? To invest, and that will push the market to do what? Go higher. But besides that, I think there is little difference between the presidents. You see, if you checked when for like when we had Biden or whoever, the market has been going up. The only problem that we had, it was that we were coming from higher inflations. So they were trying to cut the rates. They were trying to increase the rates because inflation was very sticky. And even now, today we have CPI, and it seems like it's not really cooling off, you see. But most likely is, I think Trump is going to inherit a much better economy. But the problem is, there is this credit ceiling that they're reaching, I think 35 trillion, whatever. That is too much. And maybe if they can deal with that, that is going to be good. Another thing that I see that is actually positive about Trump is, if he is going to stop wars or make sure that he's not actually involved in any war, that actually, already I did mention this, increase consumer activities, obviously, but that will actually fuel inflation. And if inflation is going up, it means one way or another, rates have to go higher. And if rates are going higher, consumers, let's say investors, they will most likely try to do what? Buy US bonds, as they will get higher rates. So which means we're going to have a stronger dollar. But is that good for consumers or everyone? Most likely it's not going to be true, because it's not going to be good. If higher rates are, like if rates are higher, it means, or let's say inflation is very high, it means things are expensive. You see, things are going to be expensive because there is a lot of activities in the government or in the economy. But if they can actually balance that, that is fine. But I don't think maybe it will just stick around the same level. But I like the fact that inflation, it was around 2 point something percent, which is not really that bad, you see. But corporation tax, it's mostly repeated in their statements. But what will this actually mean? If maybe they're going to cut corporate tax, it means they're going to pay lower taxes, right? So that will mean that they will have something in extra. So most likely, will that extra use that for dividends or maybe to grow the company? Mostly it's yes, they're going to grow the company. But how do you do that? Obviously, they're going to hire enough employees to make sure that they increase the production. So which means the profits might not really be that much. There won't be that much of a difference. If they cut from 20% of rates, of tax, maybe to 15, it's not going to be a difference because with lower rates, they can hire more and the money just go back to extra people that they hired. You see, and the term will be ending very soon. You see, so now when we say the market, maybe Trump is favoring the market, I think the most important thing here, it's just going to be a geopolitics. If he can actually try to stop the tensions, that will be good, because actually that means it's market friendly policies. If he can continue with market friendly policies, obviously it means companies, they will actually thrive. You see, they will obviously thrive. And that is actually called consumer confident. If maybe not consumer, investor confident. If investors, they can have confidence, it means there will be more people doing what? Buying stocks. It doesn't really matter what, but there will be buying stocks. That will mean we will see enough push on the market. But the best thing that we can do is to do what? Is to follow technical analysis. I think it can be quite easier when we're not really worried about every economic news, as long as we know that the rules are in favor of the companies. You see, that it's actually what we need. If we know that the world it's a safer place, there are fewer tensions, then it's good for consumers to invest. You see, so those pro-business policies, I don't think they'll have to do much with tariffs. Tariffs, they will just actually increase the dollar, the strength of the dollar, because tariffs means that they will be charging items that are coming from different countries, especially China. So that will mean that those companies who are producing those goods or items, most likely they are forced to build their factories in the US. I don't know how true is that, but we will have to wait and see, because that might also backfire. You see. But where do I see the market going? 2025, only next year, 12 months. I think since the market is mostly on the emotion side, we will see the market going higher, obviously. Why? Because just because we say business, Trump is pro-business, we see Elon Musk in there, whatever, I think the market will actually go a little bit higher, but still reversals will be there. You see, it's not like we're gonna see something new. Plus, beside Trump, we have the AI thing going. We have electric cars going. Plus, Trump, he want to pump more oil. You see, so obviously, all those companies, they will be performing very well. We are coming from higher inflation, so which means the economy is now actually rebounding from the lowest levels. So which means we will see the market going higher. But I don't think we will see some aggressive, crazy moves. At the moment, I see the market is actually a little bit higher. Yes, we might see those reversals. Obviously, the market did push up. We can see that now on USDT. Oh, this is Nasdaq. We can see that it's struggling to go a little again to push higher like before. So it's like everyone can see that. Why are we buying, or what are we supposed to buy? The market is on the highest level. So once reality kicks in, it's where we will start to see the market doing what? Starting to go a little bit lower. Then the market will go back to their senses. But slowly, as long as we're going to have tensions or tariffs, I don't really see any push that is sustainable in the long run. You see. So another thing is be extra careful. A stronger dollar means higher inflation, and that is not really good. And that is actually what is happening currently. You see. But what I like is the behavior or the way we see Trump, I think, is actually, obviously, consumers, they feel confident with him and they will be spending more. That will mean more activities, enough activities in the economy, and that's what we want, you see. So that, I think, it's something that we should think about. So I don't think maybe we're going to see any struggles in the market and stuff like that. But what I see here is the market will just continue to go higher. Not really crazy, but the market will just go higher because things are looking good. Inflation has been going down, but it seems like now, as we saw the dollar trying to push higher, inflation might start to go higher again, and that will mean that we'll have higher rates for longer. And that is not really good. That's not really actually good at all. But it seems like the companies, they don't really care much. It seems like they're already used to that, you see. But 2025, I think, is going to be great. I'm expecting to see a continuation of that bullish move. I don't really see crazy rejections and stuff like that. Yes, along the way, we will have those rejections. But at the end of the day, the market will be going higher. Why? Because there is someone who is pro-business in the office, and that seems to be a good thing. You know, investors like to know what's really happening or what we should expect next. So even if anything's not really happening now, but by saying that we will do this, we will do something positive to boost the economy, we will do something to boost the consumer, that is good. Whether it's 10 years, even if it's going to happen in 10 years, the market will still go higher. You see. So I think that is something that we should be checking. So next year, I think we are going to go on the bullish momentum. But on gold, I see gold reversing. Gold will be reversing very hard. So I think this video it was not supposed to be quite long, and it was not really prepared. If maybe you find the information very good, thank you very much. Don't forget to smash that subscribe button, like, share with your friends. And yeah, for those who want the system, it is still available for $149. You can scan that QR code and talk to me. Thank you very much. I will see you on the next one. Bye.